Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to the One Bitcoin Show. Today is November the 7th, 2018. Strong hand, long-term thinking, unconfiscatable, offended by selling. All right, we've got a very special middle of the day show for everyone. Simon Dixon is the special guest. You've all seen him on the show before. He's the CEO and co-founder of Bank to the Future. He's coming in from Italy today. Hey, Simon, how you doing?
Good to be here. It's been a while, it seems.
Yeah, it's been a little while, but I want to have a flashback to something that was going on a year ago, actually. It was on a Sunday. It was November the 11th. Well, that was a Saturday. It was November 11th. It was a Saturday. And that Simon came on my show on that very day. And it is linked to below. Simon's Twitter is also linked to below. So always check out the link section below, people. All sorts of affiliate links down there also. But yeah, a year ago, you came on the show. 2X had just died, and people started to pump up Bcash. And at one point, Bcash by market cap was the #2 cryptocurrency on the planet. It overtook Ethereum. You came on the show. You calmed everyone down. There were all sorts of people saying, "Oh, should I sell my Bitcoin for my Bcash? For Bcash, is Bcash the real Bitcoin?" Of course, now we all look back on it and we smile. We know Bitcoin is the next Bitcoin, but it was just a wild scene, and it was a great video. Again, people link to it. Check it out below. So here we are a year later, and Bitcoin is still here. Bcash is still here. But something that I never would have predicted, Bcash, it appears like it's going to split on November the 15th, which is kind of ironic because it was formed through a split. So tell us your thoughts on the situation and how this has evolved over time. And if you could have predicted such a Bcash fork just a year ago when we were talking about this.
Yeah, well, I mean, God, I think I need to watch a video again because it seemed like time moved so fast. I can't even remember what was happening back then. But if I remember correctly, we were, if it was a 2X time, we were about to hit a third Bitcoin, I think. And people were trying to look at all the different thoughts of how to scale Bitcoin. One of them was, which is the current BTC Bitcoin, was looking at off-chain scaling. And then you had the hard fork where Bitmain was threatening to create his own version of Bitcoin. And Bitcoin Cash came from that. If you remember, originally Roger Ver wasn't even aligned to it. He used to say, you know, I'm not really sure. I'm not the creator of Bitcash, or I'm not anything to do with it. But then a few months later, he decided that this is the original Satoshi vision, and got behind Bitcoin Cash. Because it had a different philosophy on how to scale, and that was through bigger blocks. And then we were going to have the combination, the original agreement that happened in the scaling debate, where we were going to have both bigger blocks and SegWit, which would enable off-chain scaling. And we were going to have the three, and then the three communities can divide. But Jeff Garzik, who was the lead developer of SegWit 2X at the time, decided that he wants to focus on other things, and he looked at his own coin or token or his own project that he was working on. And there was the whole user-activated soft fork where users were looking to and it was cancelled. And so that's probably where we left off. If I remember correctly, we were in the midst of the Korea suddenly becoming a significant player. China, I'm not sure of the exact timing. It's so hard to remember, but China was in the process of banning exchange of tokens and Bitcoin. And then Korea was becoming a more and more significant player. And on one of the Korean exchanges, I can't even remember which one it was. I think it might have been BitThumb or something like that. there was just an immense amount of Bitcoin Cash being pumped into the ecosystem, and a lot of Korean won was being used in order to purchase Bitcoin Cash. There was a lot of FUD around that there was this flippening, and people were very concerned about if they had sold some of their Bitcoin Cash, whether there was, the fear, uncertainty, and doubt. The FUD was at an all-time high at that point, and I think we were doing a calm down. Bitcoin's not so easy to replicate. It has some unique properties that are very, very hard, if not impossible, to repeat again. Bitcoin, I guess, over the year, we were in a massive bull market, an overextended market, and we've had a calming effect ever since, where Bitcoin has kind of been focused on development and dealing, and building, and we've had a correction of the price, a filtering out of the weak hands. The people that are still around, are probably here to stay. We've seen that hard forks can happen, and we saw a few more of them. I think it was Adam Meister that created the Bitcoin dividend phrase.
No dividend, baby. Yeah, you know it.
I remember. And the Bitcoin dividend was a very, great way of looking at it, that it was just free money. If people has a different philosophy of how to scale Bitcoin or take it further, then people can go off and do what they want. And even if they want to create a scam, it still might end up in some free Bitcoin dividends, which was a really interesting philosophy. And now, where are we now? Well, we've had the split. Well, a split is not really the right way. It's people that believe in the different solutions for scaling. And even if you don't really believe in the different solutions, many people believe that BTC is BTC. And there's a community that wanted to make optimized for the user case of cash with Bitcoin Cash. And that's got its own community. And what we're seeing right now is that different personalities are really driving split ideologies within the Bitcoin Cash community. So we found out that for anyone that was selling their Bitcoin Cash over the last year, you were more than likely selling it to Bitmain, because Bitmain is the new Satoshi Nakamoto of, Bitmain, the company, which is about to be public, has got over 1 million Bitcoin Cash, which is an interesting number, because that's about the same number of Bitcoin that the original Satoshi Nakamoto wallet has. The big difference is that Satoshi Nakamoto has left the industry and is not a personality that can be attacked, despite the fact that people would love to. Whereas Bitmain, that owns 1 million Bitcoin Cash, is now a public company with a fiduciary duty to its shareholders, that is sat on a ginormous position. And if Bitcoin Cash does become cash for the world, then Bitmain becomes the Federal Reserve almost, because they can control the monetary policy through buying and selling those 1 million Bitcoin Cash. If they succeed at creating cash for the world, then Bitmain becomes the Federal Reserve. It's a really, really interesting scenario. But now we've seen different ideologies. Whereas Bitmain is very much focused on the tokenization user case. They want Bitcoin Cash to get some of the effect that Ethereum has had when Ethereum built itself through the ICO markets. Has had a big correction now, but Ethereum essentially created massive disruption in capital markets by allowing people to issue their own tokens and sell it to others. And now that's moving through a securities token phase. But Bitcoin Cash is looking to capture some of Ethereum's market share, and there's huge disagreement about how to do that. So you've got Craig Wright with nChain that believes that tokenization is not the most important user case for Bitcoin Cash, and in fact you should focus on cash, and that they will need billions of transactions per second. So they want to increase the block size to 128 megabytes. And then you've got all other interesting characters that have come out of the woodworm. So you've had Cobra, that used to own the website bitcoin.org, or I think he still does. I'm not sure of the situation with that anymore. He's trying to create a version of Bitcoin Cash that has replay protection and doesn't have any of the changes. And then nChain wants to create a version that doesn't have replay protection, and Bitmain and Jihan Wu want to upgrade and create a different version. And really, we're having, you know, a similar thing, but really all these different ideologies about what Bitcoin Cash is being driven by these personalities, and these tribes are gathering behind them based upon what you think Bitcoin Cash should be. So I'm really sat on the side, more of a spectator. I remember originally when the hard fork was happening with Bitcoin, my major concern, my number one concern, was that if we had two versions of Bitcoin, then the fixed money supply, the 21 million Bitcoin, you know, inflation rate, whatever you want to call it, fixed supply, the monetary policy, that's the word I was looking for, would be deviated, and you'd now have 42 million Bitcoin. And if you can hard fork and you can have 84 million Bitcoin, then we have just destroyed one of the most important features of Bitcoin, which is firstly the ability to own your own money, secondly the ability to spend your money, but all important that gives it the store of value properties is the fixed supply that cannot be violated and has consensus across the whole network. So that was my main concern, but it turned out that you can split off a community, and Bitcoin is still Bitcoin and Bitcoin Cash is Bitcoin Cash. I don't buy the argument that you know, one of these is more Bitcoin than the other. I get that you might have different philosophies around that, but if I ask you to send me Bitcoin, you're going to send me BTC. You're not going to send me BCH. And so Bitcoin is Bitcoin, and if I say send me some Bitcoin, people will send me some BTC and ask for my BTC address. Anyway, so that's the state of play that we are, I guess, a year on, and I'm watching as a spectator, and I think everyone's going to have some, you know, a couple of coins, and so everyone's pumping into Bitcoin Cash right now because they're hoping that two coins are going to be worth more than one. And so people are converting their crypto to Bitcoin Cash in order to get a couple of them, and hoping that they're going to be worth more and then maybe go back to BTC. I don't know. Speculators will be speculators and do what they want to do.
Well, that's my question. So conclusion, you think that there will be two BCAS, it's going to split on November 15th. They're going to be two coins.
From all I can see, you know, there's only a few major influential players in the Bitcoin Cash community. You know, you've got very much, you know, one of the major differences between Bitcoin and Bitcoin Cash, from my estimation, is that while you have pockets of centralization within Bitcoin, i.e., you know, a group of influential developers, or more, you know, centralization of certain amounts of hash power, mining power, and equipment. What we saw with Bitcoin is that they don't really collude and they don't overlap too much. So the users, the developers, the miners, the businesses that try to collude to create SegWit2x don't have enough influence to influence the entire community. But what we're seeing with Bitcoin Cash is that we have these, you know, personalities that have significant influence because, you know, take a company like Bitmain, it controls massive mining pool, has a massive amount of the hash power, invests in all of the companies, owns 1 million Bitcoin Cash, is the one that created the ABC fork in the first place and got the developers to create it. Also is invested in a lot of the media outlets. And then you've got, you know, other you know, different kind of, you know, and then you've got nChain that became a personality with Craig Wright, and obviously you've got Roger Ver. We don't know where he's going to go next, and so I'm pretty certain that they're not going to reach a consensus on that one, and we're going to have a tokenization versus ginormous blocks split, and we're going to have a further splitting of the Bitcoin Cash community.
All right, and do you like, when we went through the original Bcash fork, Bitcoin plus Bcash was worth more than just Bitcoin prior to the fork. Do you see that same thing happening to Bcash? Bcash plus new Bcash being worth more than Bcash beforehand?
It's an interesting question. And what I'm quite excited about seeing for the first time is what happens for a hard fork in a bear market. We saw the very first, you know, split with Ethereum versus Ethereum Classic, and the sum of the two tokens was greater than it was before. We were in a fairly sideways market at the time. I think my battery's about to go, so I'm just going to plug in. Bear with me a second.
Okay.
Before we go.
While Simon's plugging in, thank you, R. Rafterman, for the super chat, man. And everybody, pound that like button. I love how Simon brought up this is going to be our chance to see what a major fork, a major crypto dividend is like in a bear market. We haven't seen this yet. So this will be oh, Simon, he dropped off there totally. Whoa, what? He'll be back. Don't worry. Anyway, yeah, it should be very interesting to see how this develops, and I want to hear what Simon has to say. I mean, he brings some definitely some interesting insight to the table. And don't worry, he will be talking about that Tether FUD later also. He's got some insight on that issue. And hang on, let's see. I got to monitor my Twitter here too. Got to do a lot of stuff to make sure Simon gets back on. What do we got here? Oh, battery went, he said. Okay. Yeah, hang on. Look at this. This is live. This is live stuff for you guys. You got to love it. In the meantime, while we eagerly await Simon's return, oh, we were at such an important part of the show. Anyone got any questions over there? Anyone? Oh, I can answer your questions in the live chat. I can actually look at. Oh yeah, he'll be back on soon. But so a little intermission. If you got questions for Simon, for me, we will definitely be able to answer them. So throw them out there now. This is a time for me to copy them. I will say this. There are a lot of people getting excited about, now again, I'm just watching this with popcorn, okay? I'm not telling, just because we're talking about Bcash doesn't mean go get Bcash. But yeah, the price is definitely pumping because people are just now finding out about this fork, even though it's been out in the news for quite some time. It just shows you that insider information is out there, but people choose to ignore it, and that's why it becomes insider information. Martin Carter says, how much does he reckon on each Bcash be worth? Dude, I doubt he'll give us that. But I'll ask him. I mean, going at it right now, let's say Bcash right now is worth 0.1 of a BTC. You know what? I'll ask a question that's similar to that. Is which Bcash is going to win? That's something I want to ask him also. But
I think I'm back.
Back? You're back. Yes, you are.
The show must go on. The battery dies, and we plug in, we carry on. Oh,
dude, we carry on, baby. Pound that like button, everybody, if you like recoveries like that. But so you're saying, yeah, that during the Ethereum Classic Ethereum fork, that was a sideways market. That was the summer of 2016, I believe. And now you were about to say, you know, what to expect in a bear market. Well, yeah, it's definitely an altcoin bear market. What can we expect from a fork? So what can we expect from a fork? Oh, you're muted. You're muted, Simon. Yeah.
Yep.
There you go. Okay. Now you're unmuted. Yeah.
Yeah. With Bitcoin and Bitcoin Cash, we were obviously in a bull market. So we had everyone did very well, whatever they had. I think it trended around that 0.1. And then at times it went up, 0.2 BTC to BCH, and then came back down to 0.08 BTC to BCH. So whichever position you had, you kind of really did the same, or there wasn't too much in it. But everyone did well in 2017. But this isn't a bull market. We're either in a consolidation phase, or we're still in a bear market. So I don't know. It's you're gambling. If you're moving over to Bitcoin Cash just to get two versions, there's no guarantee that these are going to be worth more than just having Bitcoin Cash on its own, or leaving it where it was. So it's purely speculative. But it would be interesting to see. We've had a sideways market. We've had a hard fork during a bull market. Now let's see what happens when you have a hard fork during a bear market.
And which ones do you think will win out? Will be the more valuable one, the Bitmain version or the N-Chain version?
I've got nothing to assess that on. I don't know enough about the communities. I know that Vitalik jumped out on Twitter saying, use this opportunity to get rid of Craig Wright, because he very famously at a conference I was at in Korea called him a fraud to his face. Vitalik thinks that this is a good opportunity to get him out of the community. Who knows? I mean, Craig Wright has built a tribe around him, but some people take a lot of offense to some of the way that he is and how he presents, and so I don't know. We'll see. It's probably going to be decided by Roger Ver, whichever way he goes. He'll take the community with him, and he's got his mining pool as well at BnkToTheFuture.com.
Now, you mentioned Bitmain being quite a large holder of Bcash, and you also mentioned their IPO, which it hasn't happened yet, has it? No, but I mean it's
happening.
It's happening. This could help them. They could get, if the two coins add up to more than the previous coin, this is going to be a bunch of free new coins for Bitmain. I mean,
sure, and there's there's some really interesting user cases there. So Bitmain is due to go on the Hong Kong Stock Exchange, and as you know, one of the SECs in the case of Nasdaq listed and New York Stock Exchange listed and Pink Sheet listed stocks, it's had a real big issue towards people pumping their stock price by using the word blockchain and cryptocurrencies. Now, Hong Kong is actually coming out and taking a more aggressive approach to regulations of crypto businesses. Is looking to, BitMEX is one of the major companies there, and it's looking to regulate the futures market for cryptocurrencies. And so it's going to be really interesting to see how, these perceived events that could be could be seen as market manipulation of a stock price, which is a heavily regulated field, in absence of much of the laws and manipulation laws and regulations around the crypto market, what impact that's actually going to have. And it's just a very interesting time if you're kind of using crypto shenanigans that is causing people to jump into your stock and causing parabolic increases in your stock price. And then that's dumping and short sellers are coming in. You're going to have some really interesting times as we see this mergence between these two different worlds as stock markets meet, creators of cryptocurrencies.
Here's a great question from the audience, and we're trending toward this type of question anyway. What's your opinion about the institutional developments like BACT, BAKKT? How's that progressing in your mind?
I think the institutional side of the market is growing. There's no doubt in my mind that the next bull market is going to be institutional led. We're changing, the nature of who was behind and what drives the market in cryptos. The original user cases of crypto was coming from a libertarian mindset and also giving people the ability to buy things that the government doesn't want them to buy and do things that the government might not want them to do. And those were the original foundations of Bitcoin and drove all the volume in the early cases. Then you had merchants come along through companies like BitPay that were selling their Bitcoin for pounds that was often being sold to people that wanted to buy drugs on the Silk Road. That was the original user case. And then you started moving towards, some of the trends that we saw with Ethereum and ICOs where people were actually purchasing cryptocurrency in order to get into other cryptocurrencies. Then you saw that it was the 2017 was a purely retail driven, crowdfunding driven crypto bull market where everyone was participating, particularly young people. And I got no doubt in my mind that the next one's going to be institutional driven. The institutions have had enough time to figure out their policy around this stuff. Many of the companies are driving those institutional solutions. It's not a market I'm particularly interested in myself, but I can see the impact that it will have for people that actually want to use Bitcoin the way it was designed, own it, spend it, and hold it themselves, and have a self-sovereign future and a fixed money supply. And institutions are just going to suck a lot of that crypto out of the market, and I think that's going to drive the next bull market. as we, but I'm not forecasting anything like that until at least mid 2019. But these are all welcome, developments and institutions. At the end of the day, there's a lot of money in that market, and they just aren't going to be holding Trezor wallets and using Bitcoin for the way it was intended. But they are going to suck a lot of the Bitcoins out of the market, which will benefit those who hold them on their own hardware wallets as the money supply moves from people that were using them more frequently to the almighty, ginormous hodlers of institutional money.
Yes. Well, now let's talk about the opposite of gigantic holders. I almost said that. How much close, and we were talking about Bcash before, how much closer are we to seeing crypto being adopted for daily transactions on a larger scale? Because, I mean, that's what Bcash is. I mean, that's their dream. They want, and Dash is also, that crypto is going to be used for daily transactions on a very large scale. Are we getting close to that, or are we still pretty far away?
Well, this is one of the things that I do really admire the Bitcoin Cash community for, because it does remind me a lot of the old days when people were really, really excited about every single merchant that would start accepting Bitcoin, and they're really, really pushing for adoption. They're doing everything they can to get people to want to use crypto. And I respect that, because I think it's an important part of the ecosystem. Making Bitcoin more spendable is the reason why we're trying to scale. In terms of adoption on that side, we're investors in BitPay, and transaction volume very much drives around the price of Bitcoin. But those are people that are converting it, and then we've got the whole stablecoin phase that we're seeing right now, where everyone's looking to have their own stablecoin, which allows people to stay in crypto, but add some more stability there. And I think we're going to see the next layer of applications whereby you can spend Bitcoin, you can use Bitcoin, the wallet will take out all the geekiness, and it will be held within some kind of stablecoin that doesn't leave crypto, and then gets converted back by some kind of atomic swap that's optimizing for the blockchain that can perform that short-term task in the most optimum way. And then you store it back in the only crypto that's got a shot of being hard money, which is Bitcoin. And I think it's a positive development that we're seeing, where you're seeing people pushing for all these different user cases, but I'm still not seeing that many people accepting crypto. There's huge friction. I personally have been going through the process of trying to purchase my house with Bitcoin, it's been about a 9 months process of just trying to get the bank to agree to accept the funds, and knowing that it originated from Bitcoin, even though all of the Bitcoin I'm using to purchase the house, I can even take it back to the Genesis block where it was mined, prove that it didn't even hit a Silk Road or anything along the way. But you still got, real friction between these markets, which is driving the person that actually is trying to sell us the house to want to just accept Bitcoin direct, because the bank is making it such a painful and horrible experience. And so if someone like me that's got all the paperwork, everything one would need, as someone that understands the intersection between fiat and crypto and the regulations around that, if it's a bit of a struggle for me, then it's going to be a bit of a struggle for others that maybe have not, put as much diligent paperwork behind, tracking, keeping all the paperwork behind their transactions and trying to get it into the market. But the good thing is I think the developer, the end result has just been such a painful experience to him that I think he's just going to take the Bitcoin himself and do it the way that I asked him to do it 9 months ago, rather than going through this stinking banking system that's censoring, not allowing me to spend my money, and making me lose money because of the political environment around whatever's happening between America, Europe, and Great Britain.
Well, that's great that at least you got another guy who now considers Bitcoin to be legitimate. He'll take a bunch of Bitcoin from you now. I mean, that's a positive out of that. You got a new Bitcoin user. Well, let's you mentioned stable coins, and we weren't going to talk about this, but I want to hear so you think they're here to stay? You think they got a legitimate use case, or what's the deal?
Well, the user case, I mean, stablecoins are a very, very useful thing. I mean, they allow people to transfer money between exchanges. So now you've got a Coinbase stablecoin. I can take my crypto out of Coinbase and put it into another exchange that is accepting USDC, or I can trade it for USDT if I don't like the credit rating of the censorship that Coinbase is likely to have as a centralized institution, or if I don't like the credit rating of the Federal Reserve, then I don't need to put it in USD. Or if I don't like the credit rating of Bitfinex because of some of the news that's coming out, then I don't have to hold it in USDT. But it allows us to go. So, you know, I mean, a lot of our crypto bull market, a lot of the volume comes from speculation. And the fact that, you know, the major exchanges, the largest exchange in our industry, Binance, doesn't accept fiat because it's all held in Tether with Bitfinex Bank, has allowed that exchange to become more profitable in some cases than Deutsche Bank, and driving a lot of the growth in the industry because people don't have to convert it out into the fiat and go through some of the excruciating pain that happens when you generate wealth in this industry and try and get it back into the fiat world because of the failures of the banking system. It's not a crypto problem, it's a banking problem. And stable coins just allow you to have more friction, more choice, arbitrage, create more efficient pricing between exchanges. And they're a very useful tool, very useful mechanism. And in the future, they will be used in order to hedge some of the volatility in a transaction in the very short term without even knowing that you're going via a stable coin, without having to put it in the bank or convert. This is, to me, is a really vital part of the ecosystem. And while I would much rather, be driving Bitcoin adoption, at the end of the day, until the entire world doesn't think that Bitcoin's a scam, a Ponzi scheme, or a currency for drug dealers, then it's always going to be a volatile currency. And then eventually it can reach to, more of a median of exchange or a unit of account. And then we won't need stable coins. But for the meantime, you still, for consumers to use this in very useful ways, stable coins have useful utility.
All right. So I want to quickly, we're going to talk about one specific stablecoin in a second. Thank you, Avention MGTOW, for the $5 super chat. You rock. And yeah, man, it's crazy juggling around here, man. Okay. So stablecoin Tether, a lot of FUD about it. What's your take? The FUD is over.
So, the reason why I'm in Italy right now is I'm at the Bitfinex shareholder meeting. We supported Bitfinex in their hack recovery. I think it was approximately 2 years ago when they went through the unfortunate event of using a BitGo, which had a compromise in the technology that led to the massive theft of lots of Bitcoin. And then they put together a coin in order to bail out the exchange rather than losing everybody's money and doing the Mt. Gox scenario. They came up with their own financial engineering using crypto, and we supported them in allowing people to convert that crypto into equity via our securities business at BnkToTheFuture.com. And it turned out to be one of the most rewarding, profitable, highest return investments we've had on the platform. Bitfinex, they were, I guess, the inventors or the ones that had, Tether was used for years and years and years and no one was really using it. But during the crypto boom, you had all these exchanges come up like Binance and Huobi and OKX that didn't take fiat deposits and were using Tether as the mechanism for essentially not having to go through all of the hassles of the banking relationships and holding the bank. And we always knew that Tether was, backed by, as shareholders, there's only so much we can actually say about it, but we knew that the money was there. The challenge is that it's a very, very tricky situation because there's a massive failure in the banking system. And that is that banks do not want to see cryptocurrency succeed, and they do not want to support any exchange that has a more privacy-centric policy around cryptocurrency, while at the same time, and Bitfinex was that exchange, and they became, you know, the one that was holding all the fiat for all of the other exchanges like Binance to thrive. And that became a very easy target for people to criticize, because at the end of the day, any bank that supported Bitfinex would get attacked, harassed, you know, had every single thing. And the FUDsters were essentially doing more harm to the crypto market than they could possibly understand. As a result of this, so Bitfinex finally, you know, has found a bank that is actually willing to actually say that the money is on deposit and put an end to the FUDsters, so to try and close the spread, because traders are taking advantage of the fact that Tether's trading at a discount, which is meaning that they're, you know, purchasing the Tethers and arbitraging it by withdrawing dollars. You know, that's creating challenges for that. But at the end of the day, now the bank has come along, and they're a very brave bank, because they're getting all of the threats and everything that comes along with trying to support our industry. When you're a bank trying to support our industry, you get put through immense media pressure, immense regulatory pressure, and everything that comes with that. So, you know, we're at the end of, I hope, trying to show and prove that the money was there. It always has been there. But no matter what they do anyway, people are going to create their own stories. And it does provide a useful mechanism for keeping some of the centralized companies, you know, more honest in this industry. But it does a great disservice when any bank that tries to support our industry gets immensely, you know, gets put under such pressure that eventually the correspondent banks, which are then connected to the central banks, and then you try and receive your money from an exchange, and you have to go through your correspondent bank that then goes through your local bank. So there's 5 parties in that transaction that can actually censor it or cause problems. Then you do have problems with trying to get the fiat money around the system, also driving the user case for staying in crypto in the first place. You know, it's this friction that we're actually seeing. And Tether was really a utility to try and bridge some of that gap and solve some of that problem. And the only reasons we have exchanges like Huobi and Binance and OKX and all the others that came along is because of Tether.
Yeah, that made it easy for all these people to trade back and forth. I just say value your wealth in Bitcoin, and you let Bitcoin be your stable coin, people. That's my answer to all this nonsense. I will say one thing you pointed out is that banks don't want to see crypto succeed, or many banks don't. But do you think there will be a point in time when they will concede and they will realize they can make money? They can do great off of crypto. They can become crypto banks. You know, you and I talk about how people have to control their own private keys, store their crypto on their Trezor. Hardly anyone does that. So there's going to be opportunities for traditional banks to store people's Bitcoin for them, store their cryptocurrencies for them. I mean, we have all these custodial accounts that are going to be opening anyway. So do you see a time when some banks are going to totally wake up and become crypto banks?
A lot of banks see the opportunity, but then you've got different layers of banks. So on BnkToTheFuture.com, we're actually funding 2 banks right now that are looking to be crypto-friendly banks and support the ecosystem and allow crypto businesses to open accounts and cryptocurrency people to use financial products that intersect between them. And we've got 2 more banks that we're actually working with at the moment that are looking to you know, acquire banking license and support the industry. But you've got to remember, the reason that I got in this industry in the first place is because there is a greater disease in the banking system. And that is that it's not really the banks, but the banks are not making their own decisions. The banks are controlled by larger banks, and larger banks are the corresponding banks that clear directly into the central bank. The central bank has the most to lose from cryptocurrency adoption. Because they have a goal, and that is to support growth or whatever it is in their country. And the easiest way for the government to do that is by exercising control over their currency. And so the central bank do not want to lose any of their influence, any of their power, and have any competition, because they like having a monopoly over how people can spend, use, and the monetary policy of a nation. Now, in order to, the central banks only give clearing banks banking to a few. So in the case of the UK, there's about 4 or 5, like Lloyds, Barclays, RBS. And what happens with the smaller, more nimble niche banks is that they can't actually clear directly into a central bank. They have to go via a counterparty bank. And these corresponding counterparty banks are there to serve the central banking system, because they have a monopoly on the creation of digital currency that their government has given them, whereby these banks, every time they issue a loan, they can create a digital dollar or they can create a digital pound, and it's backed by a loan. And as that gets repaid, they earn interest off the creation of that digital currency. And so this is how the system works. And then you've got the smaller niche banks that all want to do something. They're very, they're very happy to be innovative. They're very happy to do something, but then they have to bow down to their correspondent banks, and their correspondent banks have to bow down to the central bank. And so you've got all these layers of obscurity, like Visa and MasterCard and Swift and everything that sits on top, until you've got parties and parties and parties that are eating into all these transactions. It is entrenched interest that comes down to the central banking problem, which is why Bitcoin in the first place was such a revolutionary concept, because it allowed you to actually bypass all of that altogether. And so will banks actually support this industry? Well, they're very happy with their monopoly on the creation of the digital currency that the government has given them permission to actually create every time they issue a loan. But the smaller banks would love a bit of that opportunity, because they're bowing down to the counterparty banks, and they're bowing down to the central banks. But every time they do that, they get threatened by the correspondent bank anytime that they see that. So it's a really, really entrenched, problematic system. And this is why, Bitcoin is just such a revolutionary, awesome thing that the world has to have in order to maintain some kind of self-sovereignty and independence and freedom in the world, allowing you to earn your own money, spend your own money, and have a monetary policy that does not give a damn about political influence, what your nation wants, what your country wants. It just bows down to mass and code and consensus.
Excellent. I'm glad I am not part of the banking ecosystem. It doesn't sound like a very fun place. It sounds like a place with some dictators trying to tell the smaller banks what to do, hold them in place. But hey, that's what we got. We've opted out. I've opted out of that, and I'm in the Bitcoin ecosystem, where there is no boss, and it's where the big boys definitely play. So I have a question. Referring back to a year ago when you were on the show, and we were and Bitcoin dominance around that time was it was around an all-time low then. I mean, with BCAS surging, and with Ripple and Ethereum. Now, a year later, where do you see us going in the next year in terms of Bitcoin dominance? Will we have any new altcoins jump onto the scene? Will people grow tired of altcoins, or will the cycle begin again in 2019 with the altcoin pumpages? Because one day the altcoins will come back, but in the 2019 future here, how about Bitcoin dominance?
All of the above. So Bitcoin dominance will go up during a bear market and go down during a bull market. That's the market we're in today. If you are looking for a home for your money, and you're looking to take it outside of the financial system, or you're looking to invest it in a monetary policy that is based upon the fixed supply like Bitcoin, then you will during bull markets, you will get more speculative with that money, and during bear markets you will get more conservative with that money. And the rules of altcoins and tokens, and no doubt securities tokens next, is that during bear markets they will fall harder than Bitcoin, and during bear markets, if you pick the right one, they will pump harder than Bitcoin, because Bitcoin is sound money, it's hard money. And that is a user case that's being built, and there's no competition for hard money. What there is a lot of competition for is all the different user cases and things that people are looking to do, and speculation and returns and all sorts of stuff around it. And if people want to be more speculative, then Bitcoin's not the place to put your money if you want to be ultra speculative. Bitcoin, as crazy as it sounds, is the safe place to put your money in crypto in the long term, with the most proven track record, the most decentralized. And if you want to speculate around that, then altcoins and all the other stuff will always pump harder during a bull market and crash harder during a bear market. And I don't see that trend reversing much. So the question is, where are we going in 2019? Well, I personally have sat through, firstly, about 6 different cycles in the crypto market. I remember the first trends when people were buying Bitcoin as a way to own their own money, spend their own money, and buying into the monetary policy, freedom, and libertarian philosophies. And I remember when people were creating altcoins as a way to pump and dump, scam, and also create alternatives and new innovation. That created another ultra high return if you got on the right side of it. I remember when the equity of the companies, many of them raised finance through Bank to the Future, when they started getting the ultra high valuations. And then you had the ICOs and Ethereum and the tokens and the pumps and everything through there. Then you had hard forks where you got dividends just for owning the crypto and holding the crypto. And I think the next one that will come in 2019, because of the institutional interest, is certainly more centralized, stupid ways of holding Bitcoin and crypto for financial institutions, which will drive a lot of the supply out of the market and put it to mega hodlers in centralized institutions. And then you'll have the securities token wave, which will probably take a year or 2 to come through for the whole ecosystem to develop. But every single asset class is coming to the blockchain, whether that's going to be the liquid network that Blockstream had developed on Bitcoin, or the side chains that Rootstock is developing, or Ethereum's going to get another shot with its next scaling solution, or EOS, or whatever whatever it is that people are actually creating, and no one knows which one is actually going to take that use case. All that we can be sure of in the crypto market is that that Bitcoin is our best shot at hard money. And there's a lot of interesting stuff that sits around that as we disrupt and change the financial system using this technology in a lot of different iterations. And there's also a shit ton of scams around that as well, and people that want to take your money. So you've got to be ultra careful, and it's buyer beware in this market.
Pound that like button, people. Buyer beware. That's a very important reminder. You mentioned these security tokens. You think this might be a big thing in 2019? Let's say it is, and let's say that Ethereum does dominate it. Well, I'll give you 2 scenarios. Ethereum dominates the security token thing. Security tokens are big. The other scenario is Ethereum doesn't jump on board the security token. What do you see under those 2 scenarios for Ethereum in terms of coming back? Because it is the #2 cryptocurrency, whether people like it or not. So what's Ethereum's dominance like in 2019 under those 2 different scenarios?
So there's 2 things that Ethereum and EOS have that most others don't have, is that they have a really buoyant community that love this thing and will do whatever it takes to make it succeed. And that's one of the things you need in crypto, is just almost a religious culture of people that love it. And there's, at the moment, in terms of smart contract platforms, Ethereum's out of fashion right now, but it's still got the largest development community. It's still got a lot of people, using that, and they're looking at their scaling solutions. So I don't think it's the last that we're going to see of Ethereum. And if you want to be a contrarian, then I think it would be a good bet that it captures up a lot of the securities token market. At the same time, I'm really excited about what we might actually see from some of the solutions on layer 2 with Bitcoin. And I would be really, really happy to see some of that, these user cases drive themselves over to some of the safest proof of work blockchain out there in Bitcoin. And I do think that EOS has got enough a community to actually build a much more centralized version of Ethereum, and it will probably optimize more than Ethereum because it's more centralized. And just the way it operates, the way that it was designed for scaling. And it's we're kind of the state of play where we are at the moment. But as we know, Adam, come back to me in a year from now, and we'll probably be talking about another load of different blockchains. But I'm pretty sure that Bitcoin and Ethereum will still be there in some. Well, I know that Bitcoin will be, but I think that Ethereum will still be there.
I do. I mean, you and I all, I'm sure you believe, I'm pretty sure you believe this, Bitcoin is the next Bitcoin. No one else is going to be the next Bitcoin. Now, I'm not the biggest expert in Ethereum, but I think Ethereum is the next Ethereum. I think EOS wants to be the next Ethereum. And so you're saying there is a glimmer of a chance that EOS could be the next Ethereum.
EOS has done incredibly well at building a community and an ecosystem that really wants to see that it succeed. And that is essentially what made Ethereum successful. Is people rallied around this concept of smart contracts, and then it just needed the one user case like ICOs in order to become a phenomenon and a super high return investment for those that invested in the ICO. I think EOS is showing very, very similar signs what I saw when Ethereum first came around. This is a very fickle market that you have in crypto when it comes to these flavors of the months and flavors of the years. And I think EOS is something to watch, and it might be a player in the future in capturing some of this ICO, securities tokens, smart contract. The jury's still out on dApps. I don't know what dApps do. I don't know any user case that's working on those yet. But I certainly see a massively bright future for Bitcoin as hard money, and as some other blockchain, which I think will still be Ethereum and the existing thinking, or might be EOS, or might be something else in terms of smart contracts, and still might be Bitcoin as well, because that tokenization user case, as it gets more regulated, every asset class is going to move over. So there's certainly a second user case that I think that we can see that's coming through in terms of applications or blockchain other than just hard money.
Could the security token phenomena of the future be as big as ICOs?
It could be as big as ICOs, but there's a couple of parts to deconstruct into that question. The reason ICOs were originally so big is because they were operating with no care or respect for regulations. And therefore, people were actually able to move their crypto freely with no KYC, no identity verification, no sign up, no putting your data at risk. Using services like Shapeshift to shift them into different places. And that drove the original demand. As it becomes more regulated, that demand moves over to the venture capitalists, the rich people, and people with high entrenched interest, because originally ICOs were pure crowdfunding in the purest sense of the word, and achieved things that crowdfunding never achieved in terms of the ICO boom. Now it's moving to venture capitalists, high net worth people, just really doing a 2.0 version of an IPO or a venture capital round, and then entertaining some of those tokens for those once they built the product and regulations might allow it to be not considered a security. And so really that's really the shift we've seen. It's just moved from proper retail crowdfunding where everyone was participating to AML, KYC, and rich people, entrenched interests, and Silicon Valley style process. Now, with the securities token industry, could it be bigger than ICOs? Well, on one side, you've got every single asset class in the world that I think many, many different companies will want to get on that trend and be a part of it. Traditional financial institutions, decentralized blockchains and exchanges, centralized exchanges, platforms like BnkToTheFuture. I think everyone's going to participate, and we're going to create a really, really buoyant market that is going to disrupt some of the entrenched investment banking interests. And it could potentially be larger, but then again, it depends on what happens with the regulatory side in terms of participation from allowing retail to go in. Because if it just creates the exact same rules as doing an IPO, then we haven't really changed anything. But what really does change things is if you can use some of these user cases where people can actually take some of their securities hold it on their own phone without some of the custodial interest in the middle, and then do it in a whitelisted way where you can go from regulated platform to regulated platform to owning your own security, then I think we can create a lot more liquidity in the industry than was previously there. And I think it could definitely be bigger than the ICO wave that we've actually seen. But before it was really driven by mass participation of anybody, ignoring everything that the government wanted them to do in terms of money laundering, KYC, and securities laws.
Yeah, this is probably not going to be a wild, wild west type of pile on, I guess. Well, we were talking about Bitmain before. Let's talk about one of their competitors, Bitfury. They just raised a lot of money. What are your thoughts on that, and what it means for the industry?
Yeah, I mean, Bitfury, well, the mining industry is getting more institutionalized. They've got to catch up with some seriously big players that want a part of that industry. I foresee that we're going to have, we've already seen the Samsungs and the Intels and GMOs in Japan getting involved in that industry. And I think you're going to see a lot more institutional players. Now, Bitfury is a bit of a sour topic for me, because I do remember when they were very, very early in their business. They flew over to meet me when we were first starting BnkToTheFuture.com, and I was very sketchy about the company. And they wanted to do the seed round with us, and we didn't actually do it in the end. And that was one of the biggest deals that we let slip, because the valuation of that company and the value that they actually created would have been, on parallel with some of the more, bigger than some of the more successful companies we've done at Bank to the Future. So I wish them all the best. I think it's good to see companies that, they did have their roots and core. They were there at the very beginning in crypto. Bitfury's been around for a long time. You might not have liked some of the decisions that they made over time, but they're one of the companies that's really got an important part in our history of crypto. And they were developing chips and doing, mining in times when it wasn't cool to do so. So I wish them all the best. It's great to see the success that they're, raising these larger sums of money. And I wish them, well, competing with some of the large, big pockets of money they're going to get in this industry.
Big valuations for companies based in this industry. It's a good thing, and it's a trend I think that will continue into 2019. Speaking of a company that has a large valuation, Coinbase, where do you see them going? You see them going public, or you see them getting bought out by someone?
Absolutely. So one of the things we're excited about at Bank to the Future is that we're about to launch our secondary market, which will allow investors to actually buy and sell shares in some of the more successful companies in the industry. So the highest value companies, people can actually buy those pre-IPO through our platform. And we're really excited about bringing that to market and having almost all of the large companies in the industry as our goal for 2019, and allow people to create to be able to buy and sell those shares through the platform. But Coinbase is, $8 billion valuation. Maybe they're going to get higher than that in the IPO. I think they will get higher than that in the IPO. But it's a really punchy valuation. They've got a lot of dominance in the market. I believe that they've got something like 25 million customers. I believe that they did about $1 billion in revenue and $330 million of profit last year. They are acting just like a bank to me right now. They are looking for mergers and acquisitions. They're looking to buy and get their way into everything. And I think a lot of companies are going to sell to Coinbase, and it's going to become, a bit like the Google of crypto, but I think it's going to be, become very much like a bank. We had a bit of experience. One of the companies, they recently acquired a US broker-dealer, which was one of our companies that we were a shareholder of. And unfortunately, we were a minority shareholder, so we sold that, and they're looking to get into the securities token industry. But, Coinbase is still, at this stage, the first place that you can kind of tell someone to get into crypto if they've got fiat, and then hopefully they'll go over to a hardware wallet and use Bitcoin as it was. But at the moment, they're doing onboarding from the fiat world to crypto better than anyone else. And I look forward to more and more people getting involved in that industry and providing greater alternatives. But does Coinbase have a good future? I think it does. They'll be they'll be either acquired by a bank or IPOing in the next couple of years. I got no doubt about it.
Well, that will be huge. Once it's exciting to see this development. Now, you said they might be the Google of the crypto world. They could be the AOL of the crypto world too. You know, the company that's huge at first, but then is soon forgotten. So I mean, we're still we're early on in all this, which is it's fascinating to see how this all develops. Now, you've mentioned your company, Bank to the Future, a few times. So tell us what's going on there. Tell us if you've been at you're at an event. Well, you were at a shareholders event, but any events you've been at that have been interesting lately. Just what's going on with you?
Yeah, our team have been really heads down in 2017. We were really building the foundation for our secondary market, technically, to give people the ability to. So we're doing a few things at the moment. Firstly, we're about to launch. We launched our token to power our ecosystem. We are about to launch the BF wallet, which will in the future be a securities token wallet, which will allow you to hold your own securities tokens and BFT and remove some of the custodial risk that we take at Bank to the Future, so people can have more power over their own assets. We're next launching the secondary market. So our goal for 2019 is to have all of the major companies where you can, our qualified investors can buy and sell shares in some of the more successful companies in our industry. And then in 2019, we're also looking to simultaneously disrupt ourselves. You know, we're a pretty old company in crypto. We started in 2010. And we're now looking to rebuild our platform as if we were starting from scratch and disrupt ourselves. Take some of the opportunities and possibilities that the technology allows us to do right now and build a securities token exchange with a lot of the compliance and regulations and registrations that we've accumulated over the years to support the industry. But again, we're here to do one thing, and that is exactly what we started way back before. I got invited to that first Bitcoin conference in 2011, and that is that we believe the future of finance looks very different from the past. We're here to support the industry. We don't know which companies are going to succeed. We don't know which crypto is going to succeed. We're certain that Bitcoin is going to be very, very important in the future. And we'd like to support the industry and allow our investors to diversify, support the growth of the industry. And one funding round at a time, watch the disruption of the traditional financial markets and hopefully move towards a more sovereign, freedom-based financial system that serves people better.
Excellent. Disrupt your own company. I'm the Disrupt Meister. I know all about that. Well, I got to say, Simon, you have people in the chat are saying you've made their hands so much stronger. And you do. Every time I talk to you, you strengthen people's hands and they hold on to their Bitcoin even harder. So anything we forgot to talk about you want to mention? Any strong hand commentary? The floor is yours.
Yeah, let's end with that one. So I personally, throughout my involvement in Bitcoin, I have seen my $30 Bitcoin crash to $3. How's about that? That's a 90% correction. I've seen my $1,250 Bitcoin crash to $250. And more recently, I've seen my $20,000 Bitcoin crash to approximately $5,000. But what we're noticing is that those are smaller and smaller crashes over time on higher and higher liquidity and more adoption. And so I have no doubt in my mind that I'll see my $100,000 Bitcoin crash to $30,000. And eventually, I think where this is going, if Bitcoin becomes hard money and the traditional financial system continues to fail and continues to create more and more reasons that make people want to own their own money, spend their own money, and creates a monetary policy that rewards people that take on debt as traditional money does, whereas the crypto and Bitcoin allow people to rewards the saver in the long term, is where I think this is going. Then I think I'll also see my $1 million Bitcoin crash to $300,000, and eventually, depending on how long I'm around, we'll see it eventually actually become, a medium exchange or a world reserve. The central banks will probably start accumulating it. and it will actually become a world reserve asset that has complete independence from political pressure and no country's agenda. And I really look forward to seeing where that goes and where we go next. So it's really exciting times. And again, you might think that this is a bear market, this is hard, but we are right at the beginning of the most exciting time in financial history. And I have seen this time and time again. This is my third time of seeing this. This looks exactly the same as the Mt. Gox crash, leading through a 1.5 year bear market, a consolidation sideways market, everyone talking about how crypto is dead, everyone talking about the new alternatives. And then we have a parabolic increase as this financial innovation drives a new thing that creates the next bubble, but each bubble actually bottoms out and consolidates at a significantly higher value than the last one.
Yes, I have told people it's all cyclical. We've seen it before, and it's great to have a guest who's been in it longer than I have, who's seen more than I have, to remind everyone that, hey, don't panic, have a strong hand. It goes in cycles. It comes every time. It comes back again and again. And again, people, don't get into debt. Savings over spending. All right, Simon Dixon, thank you very much for your time today. You rocked as usual. Everyone, remember, I post a new show here every single day. You never know when a special guest is going to come on in the middle of the day like this. Is so unpredictable. BnkToTheFuture.com. Check out the links below. You can check out Simon on Twitter, link to below, and me on Twitter at TechBalt, TechBalt. I'm Adam Meister, Bitcoin Meister, Disrupt Meister. Subscribe to the channel, like this video, share this video, pound that freaking like button. We'll see you tomorrow. Bye-bye, everyone.